Welcome to your weekly market recap. If there's one word to describe this week, it's dispersion. Global indices ended mixed, but beneath the surface, a violent rotation separated the winners from the losers, with AI optimism, currency policy, and political headlines driving the tape. In Asia, we saw a clear tale of two markets. Korea's Kospi was the standout global performer, surging 42% to close at 6,977. 94. The rally was led by heavyweight Samsung Electronics, up a sharp 43%, as semiconductor demand for high-bandwidth memory continues to outpace supply. In Japan, the Nikkei 225 edged up 59% to 68,713. 80, but the price action hides a volatile session. The index touched a high of 69,608 before pairing gains, reflecting caution ahead of further Bank of Japan normalization signals. The yen's continued weakness, with the dollar trading above 159 yen, remains the critical fuel for exporters. The laggard in Asia was Hong Kong's Hang Seng, down 10% to 25,116. 85. Naitwan was the anchor, plunging 44% as fresh concerns over delivery platform competition and domestic consumption weakness weighed heavily. Australian markets also slipped, with the ASX 200 down 80% to 9,115. 20, as mining and financial stocks took a breather. The standout narrative across Asia is that capital is concentrated. It is flowing into technology, hardware, and out of structurally challenged consumer and property stories. Turning to Europe, the picture was more subdued. The DAX outperformed, gaining 53% to 26,440. 31, aided by strength in SAP, which rose 71% thanks to continued cloud momentum and encouraging commentary on AI-driven enterprise demand. The FTSE 100 edged down 21% to 10,750. 11, while the CAC 40 drifted 16% lower. Notably, AstraZeneca was a major drag, falling 12% on renewed concerns about pricing pressure in key markets. European markets remain caught between improving corporate earnings and persistent macroeconomic caution. The ECB narrative is one of a data-dependent pause, and Europe responded passively to the US and Asian developments. There was no panic, but there was also no conviction. Oil stability near $82 provided support to energy-heavy bourses, but the lack of a clear growth catalyst kept European indices range-bound. The US markets closed the week slightly negative, but the broader tape tells a more complex story. The S&P 500 fell 17% to 7,785. 76. The Nasdaq dropped 28% to 26,729. 16. And the Dow slipped 20% to 53,732. 41. The dominant theme was the violent shakeout within the megacap technology complex. Advanced micro devices absolutely exploded, rallying 50% to 514. 39. On persistent reports that major data center customers are confirming increased orders for next-generation AI accelerators. Conversely, Broadcom collapsed 94%, a startling reversal, as profit-taking after a massive run and concerns over custom silicon margin compression hit the stock. Oracle fell 65%, and Salesforce declined 56%, painting a picture of a market that is increasingly selective. The week also featured a significant headline: President Trump claiming the stock market will double by the end of his term, a statement that generated considerable debate but no active buying. This was a week of sector rotation, not broad risk appetite. Fed expectations remain comfortingly stable, with the market fully pricing a cautious path of gradual easing, which allowed longer duration assets, namely gold, to grind higher. Scanning the global movers, the biggest gainer of the week was AMD, up 5% on AI demand optimism. Sony Group surged 73% as buyback and entertainment segment strength attracted investors. SLB rose 28% alongside firmer crude prices, and SoftBank gained 94% on a broad tech rebound. In contrast, Broadcom was the week's biggest loser, down 94%, followed by Meituan, Oracle, and Salesforce. The surprise move was in the rare earth and materials complex, where the REMX and lithium ETFs showed unusual strength, signaling that investors are positioning for a supply squeeze in critical minerals. Copper held firm at $61 as global manufacturing data stabilized. In commodities, WTI crude climbed 42% to 82.40, with Brent up 67% to 88.52. The narrative remains one of tightening supply. Extended OPEC production cuts and declining U.S. inventories have overwhelmed lingering concerns about Chinese demand. Precious metals had a quiet but constructive week. Gold rose 0.38% to $4,437.30, continuing its slow melt-up, supported by central bank buying as a hedge against currency debasement and geopolitical uncertainty. Silver edged up to 65.11 and platinum outperformed, gaining 43% to $1,756.90 as industrial demand forecasts improved. In crypto, Bitcoin closed just under 63,000 at 62,999.99, up slightly on the day, but the asset remains range-bound. A headline event was the conditional approval of a bank charter for the Trump-backed World Liberty Financial, a development that could broaden institutional access to stablecoins, yet Bitcoin failed to rally, signaling that traders are waiting for clearer adoption catalysts before committing capital. Finally, on the currency front, the U.S. dollar index slipped to 99.64, reflecting mild dollar weakness. The euro rallied to 1. Markets move fast. We break it down daily so you don't have to. Subscribe for your edge, delivered fresh every session.